All right, guys, today we're gonna be talking about some Forex tips and some things you wanna know as a Forex trader. We're gonna be talking about market phases. There's different market phases that you can take advantage of and analyze in the market. As a trader, we kind of wanna know what's going on in the market. Are we in an uptrend? Are we in a downtrend? Or are we in a kind of a no man's land market, maybe a consolidation, no directional bias in the market? As a trader, we wanna pinpoint what we are in. This is how we find good trading opportunities. We're not always searching at the moment currently, like where's the trade right now. Part of what we got to do is analyze the charts and see what phase we're in. And this is how we know which direction we should be trading in and what type of movement we can anticipate, especially when we're in a trending market. They always say the trend is your friend. I'm sure you guys have heard that phrase before. The trend is your friend, or I like to say, go with the flow. Now, in trading, we want to find the flow. We want to identify what is the flow. So understanding market phases is really going to help you with that. If you can identify, okay, I'm in a bearish trend, let me go with that flow. Okay, I'm in a bullish trend, let me go with that flow. Because you're going to have periods of times where the market can trend for weeks or even months. And it's not that we have to catch the whole trend or the bottom of the trend. We can catch the middle of the trend. That's where I really like to work in, is kind of catching the middle of the trend in between. Once I know, okay, we've made some waves, we've made some phases already, we've maybe had some extensions in the market. In this video, we're gonna be breaking down one phase. As there are other market phases, we're just gonna keep it simple and basic for video number one on our Forex tips here on market phases. This one, we're gonna talk about the bull trend phase, start and end, and keep it really, really simple. So the end of a bullish trend is signaled by a lower high peak in the market. So right here, we see a bull trend from start to finish in the market. The end of it is signaled by a lower high formation. So in a bull trend, we're gonna be making what's called higher highs. The peaks are becoming higher points. The start of a trend is down here when the structure starts to shift and you break out that first high and you create that higher high. When we retrace, if we know we're in an uptrend and we're retracing, the start of a bull trend can be characterized by that first higher structure break, that change of character, break of structure, market structure going higher, the peaks increasing, going higher than the previous one. Higher highs is what this is called in your market structure. Higher highs are also a signal of resistance. It's very easy to anticipate when we've made a higher high that the market should retrace. Understanding market phases helps you understand where you are. If you understand where I am on the chart or where I came from, what we just did, you can kind of understand the next move. Like if we're in an uptrend and we understand we're in an uptrend phase, then we know that the pullbacks or the retracements are likely to create a support to continue the uptrend. But there is a point that you need to be aware of when the trend breaks. The trend is your friend until it bends. So the trend can remain, the trend can last periods of time. We might have shorter trends and longer trends. That really depends on the higher time frame or the lower time frame that we're analyzing in the market. Maybe I'm looking at a 1 hour trend, or maybe I'm looking more at a daily trend. So that is also a key role play. Realistically, the picture that we're looking at in front of us could represent a month of the market going up, or even weeks of the market going up. We're gonna go soon to the candlestick charts, and we're gonna pull up a currency pair on the chart soon, a very common one that you guys are used to probably trading, major pair USD CAD. I wanted to use a very common pair that everybody's kind of used to, or maybe a more friendly currency pair. I know a lot of times we look at gold. In this example, we're gonna be looking at Forex pair on USD CAD and talking about the bull trend start to end. Now that you guys get an idea of the drawing of this is the drawing, right? So this is the market phase. What we can understand from this drawing is there is a point where the trend bends. So there's a point where the trend stays intact and creates resistance. That's the highs. The highs, AKA higher highs, are creating resistance. A lot of times these resistance points can turn into a support in your trend. That's where the retracements can come into play. A lot of times a retracement might find a previous high in the trend. For example, here, there's a high and the market breaks above that high in your trend. Now you can see what the market did. The market goes up and creates a new high, a higher high. When it retraces, often there can be that pullback that comes back to the previous high, creating a support, okay? So this is where a resistance in a trend can turn into a support. Now let's go over to the candlestick charts so you guys can visualize this a little bit easier and simplify it. You guys wanna study this. We have other cheat sheets for this. This is number one, bull trend, start to end, all right? There are different market phases, guys. This isn't the only one. This is the first one you can study. Remember to comment on this video if you guys like this video and you guys wanna see more. Comment what you would wanna see next on the next video and we can get that going for you guys. So let's go to the chart because I've kind of just prepared a good spot for you guys. Really good spot, keeping it basic on the chart. USD CAD, friendly currency pair for most. It's a major pair. It has that USD and CAD in it. So it moves a lot in the New York session and it can move a lot even in the days. If we look at USD CAD here, we're on the 1 hour time frame. So I have the 1 hour time frame selected. That means every candlestick going up is 1 hour of price movement. Every candle going down is 1 hour of price movement. So we're looking at a good piece of the chart here. Let's measure it actually. We can take a tool called date and price range and we can go like to the bottom and we can even see, like I can see it was what, January 12th here. But I can measure this and see this trend went on for 5 days. So take that into consideration. The market went in one straight direction for 5 days. Did it go in a straight line though? No, it did not go in a straight line. We can see over a 5-day period. So basically like a week here, the market went up. Did it go in a straight line? No, it went in zigzags. What we call waves, right? We call these waves in the market because like I drawn above, the market will go up for a period of time, but it's not going in a straight line. There's waves and you have to understand this. When you make a move, you have to kind of know where you came from, right? This is why market structure is very, very important. So we could see this went up for 5 days straight. Now let's analyze this with market structure. And let's just kind of start from the bottom here of the trend, guys. I'm gonna just take the rectangle tool and we can see here. This is where we really start bending things in the market. And you can see how highs are being created. But right here, we have that really big push up in the market, right? On USD CAD. And then we pull back, right? And then what do? We continue going up more. At this point, let's get the circle here, the eclipse. At this point, we could look behind us and say, okay, we have a market structure to work with. Remember, you don't gotta catch the full trend. You have to look and say, okay, where did we come from? What are we doing? What is the direction here? Because you can look at the chart now and see the previous resistance right here. So we have resistance. Market went above that, created a new high, right? Let's zoom in a bit. Market went above that resistance. What did it do when it went above the resistance? It created a higher high, right? And where do we go, right? When we create that higher high, we almost pull back to the previous resistance level here, right? Market retraces. So when you know you're in that phase, when you know, okay, we're in a retracement phase, we know we're in an uptrend, you have to anticipate that this move is gonna soon finish. A lot of times the market can pull back to like a previous resistance in these trending phases, but this continues up, right? You can see how this market continues up and we break this high, right? We end up breaking the high. So we're making higher highs. We wouldn't have had to catch this whole entire trend. We wouldn't have had to catch the beginning. At some point, we could look at this and say, okay, what is our market structure giving us? We're making higher highs in this structure. Continuously, look at the pullbacks, right? The pullbacks are going higher, higher, higher. We can even see how this resistance turns into a support here, right? And market continues going higher and higher, all the way until here. So where does the trend bend? Because this is a good example of a bull to bear trend start to end, right here. Right here, we have a great example of the bull trend phase, start to end. It starts down here and it ends when the market bends here. So we can see lows getting higher, lows getting higher. This is called a break of structure or a change of character in the market. You'll hear people say the word BOS a lot, BOS stands for break of structure. This is a very important part to understand and learn in the market, because in the market, there can be changes in the trend. Like we see here, we had that 5-day trend. With the market, there can be changes. And what's important as a trader is to learn to adapt to change. You want to learn to adapt to maybe a changing market. You might be used to something going up for 3 weeks straight, 2 weeks straight, but then a market structure shifts. And this is key evidence to help us know, okay, we might have to adapt and change on to things here. We shouldn't be so bullish now. The market might be shifting, or we should get out of our bullish trades, or we should just remain flat. Decisions we can make if we know about market structure shift. We can see here, right? If we're looking at the bull to bear start to end, we make that last high here, right? And we come down and we make this low. So at this point, what does the market do? It creates a lower high here. So we have a bend. Notice how I put a trend line, right? Counter trend line. I'll put that there for you guys so you can kind of see where the trend breaks as well. Counter trend line is a good tool to use as well. A counter trend line is a good tool to use to know where the market could break as well, to get like liquidity grabs. I like to use trend lines and counter trend lines to spot where liquidity could be. We use this as well in our analysis. We don't just use trend lines for the direction of the trend, we also use them for breakout points and understanding there's liquidity here, the market could break out. So you can see how we break underneath the trend here, right? We have a shift in structure. This is where the market shifts its structure, where we have a BOS and we break. But before that, I want you guys to see the structure of the market right here. You have that high, you have that high, you have that high. So the highs are getting higher until here, it's where it bends. The lows are also getting higher. So your job of a trader isn't to just look for trades every day, it's to spot things like this, clean charts. You can look for trending markets and spot them when they're there. Now, the market structure really bends after this high. We go down and we make a lower high and then we break. And notice once the break here, like once we really broke down here and we pulled back, things started trending the other direction. We started getting pullbacks the other way. So we went waves up and then we went waves down. So we had an uptrend phase that turned. And notice there was a mini downtrend phase here, because the downtrend is like the opposite of the uptrend, where you're getting lower highs. So notice break of structure, that lower high rejection. So when you get that break of structure, you're anticipating failure in the market to potentially go lower. And now you can see new waves are started here, where the market is kind of doing the same thing. It's pulling back, going lower, pulls up, goes lower. So a new trending phase starts right here. A great setup right there where you have break and retest in the market. So this is one of your market phases, guys, that you want to really learn and understand in an uptrend. Now, remember, the trend is your friend, but it can bend. You want to study this information, and your job of a trader isn't to always be inside the market. You can really wait and sit on the charts until you see clear evidence of what the market was doing. So remember, guys, comment on this video on what you would like to see next or on another video. And remember to like and subscribe for more. See you guys on the charts.